Yeah, let's continue. We have completed discussion on basis for opinion and opinion section, right? Like, for example, let's go back to the elements of the auditor's report. Let's go back to the elements of the auditor's report. See, by the way, if you see, there is a chapter arrangement which I cleverly did that. You should study audit. Any book you follow doesn't matter. First, you should study audit report chapter. Without understanding that, you cannot understand remaining standards, because in every standard they talk about implications of various requirements of that standard on the reporting. In every standard they deal with reporting. Without understanding the reporting, you can't understand. You must first understand where is your destiny, then you should lay the route. You're getting it? First we are laying the route and then finally reading destiny. That should not be the correct way. Quality control and all you should never study at first place, because it's very advanced. At the level, at the first stage itself, if you study that quality control standard, you don't understand anything. You just feel like reading sentences, translating with the dictionary meanings like that. You just feel like that. Fine. So we completed, title, addressee, opinion section, basis for opinion section. Now in exam, sometimes I'll ask you, what are opinion sections contains? What are the contents of opinion section, they'll give you in exam. So what opinion section contains? Generally opinion drafting is different. What opinion section contains is different. Drafting part we have seen. What actual opinion section says, it identifies the entity. It says that we have audited, but we cannot mention that point in disclaimer. And we need to identify title of financials. We need to refer to the notes. We need to refer about the date and period covered by the financial statements. And ultimately, another F point which is not given in the institute book also, but ultimately you should also give the opinion that you are expressing. These are the elements of the opinion. Same way, what are the elements of basis for opinion paragraph? We state that we do audit as per standards. We discuss about responsibilities of auditor, that referred in some other paragraph. We say that we are independent. We say that we fulfill the responsibilities. We state that we obtain sufficient and appropriate evidence to provide a basis for our opinion. Then if you give a modified opinion, how this basis for opinion paragraph will be modified? 705 contains the discussion. That also we have seen, correct? Next, now you see here, wordings of unmodified opinion. They have given this material. I told right, explicitly, implicitly, all that, remember? So that entire discussion, I think the concept discussion is there in the above. Fair presentation framework or compliance framework. I think this is enough technically. This is enough. I think definitions, definitions are not given. Definitions were there in the fundamentals chapter itself. If you see the original, this one, it will also contain the word explicitly, implicitly, all that. I have already given the explanation for that. Now, let's again continue with this discussion. So these elements we have completed. Now let's cover the next element, that is emphasis of matter paragraph. Emphasis of matter paragraph. That is, so emphasis of matter paragraph. So 706. Right now what we have discussed is 700, forming of an opinion and reporting on financial statements. Forming of an opinion and reporting on financials. So 700 addresses two issues. One, reporting on financials. That reporting part is what we are actually reading. Forming of an opinion. Before forming an opinion, the auditor has to evaluate two elements: qualitative aspects of entities' accounting practices, specific evaluations about financial statements. The auditor has to evaluate two elements: qualitative aspects of entities' accounting practices and specific evaluations. Specific evaluations, what are they? Whether accounting policies are appropriate, whether accounting policies are consistent, whether accounting estimates chosen by the management are reasonable, whether the content shown in the financial statements is correct, regular, not misleading, yes or no, whether the terminology used in the financial statement is appropriate. Like this, they have given specific evaluations. In exam, they'll ask you, what are the specific evaluations the auditor has to make before forming an opinion? So that answer. Sometimes in exam, they'll ask you, write about evaluation by auditor of qualitative aspects of entities' accounting practices. These are all there at the beginning itself. In 700 it will be there. In 700 it will be there at the beginning itself. If those two elements also you understand, 700 will be completely over. 705 will contain additionally what? Pervasive definition I discussed. Pervasive means what? Effect, pervasive effect are those in auditor's judgment. They were not confined to specific element of the financial statements, or if so confined, they represent substantial portion, or it may be related to disclosures that are fundamental for users' understanding of financial statements. This is the definition of pervasive. You can see in ICA book also very clearly. Before 705 discussion, it will be there. They didn't highlight specifically with any side heading. They just discuss it as a paragraph with these points. Yes or no? No, that's pervasive. Then in SAS 705 heading is what? Modifications to the opinion in the independent auditor's report. In the independent audit report, modification to the opinion. That modification, how will you modify? What are the elements of modification? What are various types of modified opinion? How to give basis for modified opinion section? So they're all giving that. You're getting it now. So except that, there is no much other discussion in 705. Even in 705, I told you, if auditor is unable to obtain evidence, what auditor has to do? Because of management is imposing limitation, discuss with them, ask them to remove, try performing alternative procedure, and if at all inability to obtain is for some possible effect is some material but not qualified, possible effect is material and pervasive, then withdraw from the audit. If withdrawal is not possible, then you have to give disclaimer. When withdrawal is not possible, LOD or all that we have seen, correct? That is what entire 705 discussion is mainly about. Then now 706. What is the 706? In the audit report, in the independent audit report, emphasis of matter paragraph, other matter paragraph we are including. Emphasis of matter paragraph and other matter paragraph in the independent audit report. What points auditor has to check? Now, what is an emphasis of matter paragraph? It is a paragraph in the audit report. It is a para included in the audit report. That refers to what? A matter appropriately presented or disclosed in financials that in auditor's judgment is important for fundamental to the user's understanding of the financials. So auditor is referring to a matter. What matter? That is presented or disclosed in financial statements, which it is important for the user to understand financial statements, to interpret the financial statements. Now you take any financial statements, Tata Motors, TCS, Maruti Suzuki, you take any company financial statements, the financial statements are spread across to 60 to 100 pages. They are spread across 60 to 100 pages. I'm talking only about one set of financials, standalone financials. Consolidated financials will be somewhere around 80 to 150 pages. Somewhere around 80 to 150 pages. Definitely, auditor must and should read the 100% of the financial statements. Agreed? We may not cover 100% of the items in the financials, but we should read the financial statements to know, to get an evidence whether they are prepared, presented, disclosed as per applicable framework, correct? Format and all we should check. 100% notes to accounts we should check. We cannot do sampling in that. And when I'm reading the entire notes to accounts, I felt there are some important note points. Note number 28, note number 22, note number 54. Like that, some note points were there, which are sensitive issues, which are dealing with contingent liabilities, which are dealing with recently happened fire accident after balance sheet date. They're disclosing something, which are dealing with some subsequent events. So some important information is presented in these points. I know company honestly presented, honestly disclosed, everything is fine. On those points, I don't have any objection. But I want every shareholder, every reader of the financial statement should read these 3 note points. I want every one of them to read these 3 note points. These are the matters that are presented or disclosed in financials. How they are presented or disclosed? Appropriately presented. Appropriately means what? Are they containing any material misstatement? No, they're appropriately presented. I want everybody attention on this point. What can I do? Highlight it. If you want attention on that, highlight it. Highlight means what? Emphasize it. Emphasize it. That is called emphasis of matter paragraph. So it's a paragraph in which we draw attention to the users of the financial statements to the matter presented or disclosed in the financials, which from auditor's judgment important for users' fundamental understanding of the financial statements. That's an emphasis of matter paragraph. Clear? Now, when you decided to use an emphasis of matter paragraph, how to present it, what conditions are to be complied so that you can use emphasis of matter paragraph, you have to comply. It is not required to modify, means the matter that you want to highlight, on that your opinion should be unmodified. The matter which you want to highlight, on that your opinion should be unmodified. Unmodified means what? When on a particular matter my opinion will be unmodified. If on that matter I got sufficient appropriate evidence, my opinion will be unmodified on that. Indirectly they are saying the matter that you want to highlight should be free from material misstatement. That is what reflected in the definition itself, appropriately presented or disclosed. Are you getting it? They're not simply saying auditor should highlight emphasis of matter paragraph to matter referred to the matter presented or disclosed. They said to the matter appropriately presented or disclosed. Now, another condition, when you decided that matter as a key audit matter, when auditor decided that as a key audit matter, then also you should not use emphasis. Indirectly, emphasis can be used only emphasis of matter paragraph. What matter you can talk? That matter presented or disclosed in financials that does not require modification of the opinion, that is not determined as a key audit matter. What is key audit matter? We'll come back later. Then what is the circumstance? For example, some fact known to the auditor after the date of audit, subsequent event, uncertainty related to some litigations, major catastrophe that had occurred, or some financial reporting framework to alert the users that the financials are prepared as per special purpose framework. Generally, if at all financials are prepared using special purpose framework, we generally, as per SCI 800, we mention a separate side heading called basis for accounting. We mention a separate side heading called basis for accounting. So that is enough to highlight. Again, emphasis is not required. So this point is example. They just said an example. So suppose a financial reporting framework, this example many don't understand. Some financial reporting framework, as per that company prepared financials, but that's actually not acceptable. In light of fair presentation, that is not acceptable. But the fact that it is given by the law, the company followed. If you want to highlight that explanation that these financials may not be that useful, but because of the law regulation we prepared like this, then also you can use it under emphasis. Under emphasis you can highlight that these financials are prepared as per so and so requirement, which may not be acceptable in light of these circumstances for various users. You may alert to that. Whatever it is you want to highlight, something that is there in the financial statements, then you can highlight. Suppose if a point is nowhere it is there in the balance sheet, P&L, cash flow notes, nowhere it is there. Can I use emphasis of matter paragraph to talk something else? No. Are you clear? Emphasis of matter paragraph is not a substitute for modified opinion. Emphasis of matter paragraph is not a separate opinion. Emphasis of matter paragraph is not a substitute for disclosures in financials. What does it mean? Company forgot to disclose something. They're asking you, sir, we forgot to disclose segment reporting. You disclose it in emphasis of matter paragraph. No, this is not a substitute. You didn't disclose segment reporting. That's a non-disclosure. That's a material misstatement. I will give modified opinion. Clear? That's it. Emphasis of matter paragraph is almost over. How should you present emphasis of matter paragraph? What is the manner of presentation? For example, I'll just show you this audit report. Just a minute. Here in the audit report, best example. This entirely is audit report only. Sorry. This is a compliance certificate in case of listed entities. That's why it's so lengthy. Yes, you see, Air India has given which opinion? Qualified opinion. Yes or no? Now some students are having confusion. Sir, when qualified opinion is given, emphasis shall not be used. No. No, it's about a specific matter. Whatever matter, you see how Air India presented emphasis of matter paragraph. You see, they gave a separate side heading for qualified opinion, separate side heading for basis for, separate section only given. No. So emphasis of matter paragraph shall be presented in separate section with a side heading emphasis of matter. And the auditor has to draw attention to the note point or the item that is described in the financials. At the end of the emphasis, auditor has to mention that his opinion is not modified in respect of the above matter. The same thing is there in the book, you see. What is the manner of presentation of emphasis of matter paragraph? The manner of presentation is the auditor shall include it within a separate section. Express the matter being emphasized. Give reference. State that your opinion is not modified. They may give you an exam. Write about emphasis of matter paragraph. Give 2 examples. What should be the manner of presentation of emphasis of matter paragraph? 5 marks question. It was tested many times. Clear. Over. Emphasis is over. Now let's discuss other matter paragraph which requires a lengthy discussion. When I'm discussing other matter paragraph, I'll be discussing 2 standards called 299 and 600 as well. Now, yes sir. So other matter paragraph. What is other matter paragraph? Look at the definition first. Look at the definition. Other matter paragraph is a paragraph which is included in audit report that refers to a matter, that also refers about some matter other than presented or disclosed in financials. Why? If it is presented or disclosed in financials, emphasis is there, na? Anything else you want to talk other than presented or disclosed in, you can talk about in other matter. About what? About audit you want to talk. About auditor responsibilities you want to talk. Or about audit report you want to talk. Regarding these 3 elements you want to talk, then you can talk about that in other matter paragraph. About audit, auditor's responsibilities, audit report. If these 3 related issues you want to talk about, which is not there in the financial statements already, then you can explain that in the other matter paragraph. For example, I will give this my popular favorite example. So let us imagine a scenario of State Bank of India. Getting it? State Bank of India Limited is a banking company registered under Banking Regulation Act, obtained banking license from RBI, which is engaged in banking operations. Getting it? So SBI Limited is having 12 joint auditors. They are having how many? 12 joint auditors, central auditors we call them as. 12 joint auditors were there to audit and report on overall State Bank of India financial statements. And the State Bank of India Limited is having 22,000 plus branches. Number might vary, plus or minus 1,000 or 2,000, some number, but approximate number I'm telling you. It is having close to some 25,000 branches. It is having some close to 25,000 branches. Out of this, 19,000 branches were unaudited. 19,000 branches were unaudited. They are exempted from audit as per RBI circular, whereas remaining 6,000 branches were audited by branch auditors. Remaining 6,000 branches were audited by branch auditors. Now, whereas overall auditors were how many? Overall, total how many auditors? 12 joint auditors. Let us call them as P. Let us call them as Mr. P. Nothing but principal auditors. According to me, they are what? Principal auditors. Whereas these 6,000 branches are who? Branch auditors. Now, this SBI Limited has to prepare standalone financial statements, right? What is the standalone financials? Nothing but head office plus all branch. Yes or no? Head office plus all branches, assets, liabilities, incomes, expenses should be consolidated, not consolidation as per accounting standard. I am talking about branch consolidation. Total bank position they should show, correct? Head office plus branches. Do SBI release branch financials to public? No. SBI will release overall financials of the SBI Limited to public. Standalone financials. Now for standalone financials, who should give opinion? Mr. P. Nothing but a collection of 12 joint auditors. They should give opinion on this. Whereas Mr. Branch auditors, 6,000 branch audit reports were there, which are prepared by branch auditors. These reports will be forwarded to principal auditors. Principal auditors, while giving opinion on the branch, while they are giving opinion on the entire standalone financial information, they use the audit reports of branch auditors and then give opinion. Agreed until now? Now, along with this, State Bank of India Limited is also having more than some 10 subsidiary companies, 5 associate companies. Example, some 3 joint ventures and all they are having. Now, State Bank of India, since they are having subsidiaries, associates, joint venture, they also prepare consolidated financials. For example, SBI Cards Limited. There is a company called SBI Cards Limited, which deals with credit cards. So that's one of the subsidiary of the State Bank of India. That's one of the subsidiary of the State Bank of India. Now, this subsidiary company is audited by Mr. Yes. Let us assume the subsidiary company is audited by Mr. Yes. Now, since State Bank of India is having subsidiary, it also prepares what? Consolidated financial statements. Now, when State Bank of India is preparing consolidated financials, on consolidated financials also audit report shall be given, right? On this consolidated financials, who shall give the audit report? State Bank of India Limited auditors only. Means these 12 joint auditors should give audit report on that. Now, there are two audit reports. Audit report on consolidated financials, audit report on standalone financials. Consolidated financials is nothing but standalone financials of SBI, standalone financials of subsidiary companies, associate companies, joint ventures. That's called consolidation. Whereas standalone financials of SBI Limited is what? Head office plus branches. Correct? Now, if you look at inside this standalone financials, inside this standalone financials of entire SBI is audited by 12 joint auditors. Head office alone is audited by 12 joint auditors. However, joint auditors are giving the entire audit report on the entire financial statements, which is going to be released to the public. But these joint auditors, these principal auditors, they have not audited 6,000 branches. Correct? They have not audited approximately 20 companies which are included in consolidated financials. They didn't audit that, but still they are only giving opinion on them. How are they giving opinion even though they have not audited? Because other auditors have audited that, their reports are forwarded to us, and while forming our opinion as a whole, we formed opinion by using their report. But if at all something goes wrong in those other auditors related requirements, who is responsible? They are only responsible. Division of responsibility. How can I be responsible? I just use their report just like how we are using my audit report. I use their audit report. Based on that, they are saying everything true and fair. I also calculate everything true and fair. Head office is true and fair from my point of view. Branches are true and fair from branch point of view. True and fair plus true and fair, true and fair. Are you clear? Now, I should tell people that branches and all not audited by me, but by other auditors, whose reports are given to me. Based on these reports, my opinion on the overall standalone financials was formed. I should tell this point, right? Where you will tell this? Other matter paragraph. Auditor responsibility. Where you will tell? Other matter paragraph, you will tell about auditor's responsibility like this. Same way, on consolidated financials, you are giving audit report, right? In that audit report also other matter paragraph is there, right? Inside that you will tell branches are audited by branch auditors, subsidiary companies, associates and joint ventures were audited by those respective auditors. They all forwarded to us their reports, and our opinion is based upon their reports also. You should tell this or not? Further, you should also tell in other matter paragraph. You should also tell in other matter paragraph how many branches were not audited. How many branches were not audited? That also you should tell in other matter paragraph. How much of the financial information is not at all subjected to audit? How much worth of asset? How much worth of liability? How much worth of income? How much worth of expense? How much is not audited? Also you should tell in other matter paragraph. In bank audit reporting requirement, this point is there. Auditor not only has to tell about number of unaudited branches, he should also quantify total worth of assets, total liabilities, total interest income, total interest expenditure, how much is audited by other auditor. Quantification also he must do. This is a reporting requirement in bank audit chapter. You have a chapter called bank audit. Inside that it is there. Now this is one responsibility of the auditor, where there is a division in the responsibility. The division in the responsibility has to be explained by the auditor in other matter paragraph. This is one example of auditor's responsibilities where we refer about other matter paragraph. Now, other matter paragraph definition: audit, auditor responsibility, audit report. Audit report, what is example? Very simple. You all know joint audit, right? Joint auditors, all of them shall arrive common conclusion and shall give a common report and shall express common opinion. However, if there is any joint auditor who disagrees, that joint auditor can give a separate audit report. When the joint auditor is giving another audit report, multiple audit reports is there, each joint auditor in their audit report should refer about other joint auditor report. Where they will refer this? Other matter paragraph. That's about auditor's report. Example of auditor's report. You know, right? SA 510 or SA 710. If preceding financial statements, previous year financial statements were audited by another auditor, predecessor auditor, you should tell about that also, right? That about audit. You can talk about audit there. You can take that example. That previous year financial statements were audited by other auditor, and other auditor has given some so and so opinion, that just a comparative information in the audit, comparison of audit report of the last year, that is about audit. So other matter paragraph is a paragraph that contains auditor's description about some matter that deals with audit, that deals with auditor responsibility, that deals with Auditors report. Now until now what we know, as per SS 600, principal auditor is not responsible for other auditors. Correct? All of you. Now let's look at this 600 directly. Let's look at the 600, then I'll come back to other matter paragraph. 600. Now you see, there are definitions. It's a division of responsibility. The principal auditor is not responsible in respect of work entrusted to other auditor, except you found suspiciousness. Right now, recently, there is a cafe coffee day case which was detected, fraud which was detected, in which KPMG failed to perform necessary due diligence. Getting it? We have a standard parallelly called ISA 600, International Standards on Auditing. In that standard, division of responsibility is there to some extent, not fully. Principal auditor has to verify competence of other auditor. Principal has to verify working papers of other auditor. There is a duty on the principal auditor. Whereas in Indian Standard on Auditing 600, there is no such duty. Saying that, this KPMG and all arguing, we are not responsible to verify other auditors' opinion, all that. But NFRA do not agree. No, that is completely the very basis purpose of the audit itself is deceived. Even though it is audited by others, you should verify. Like that, some big entire issue is going on. I already made a video in the YouTube regarding this one title. Just yesterday or day before, I posted this video. So 50% of the listed entities market capitalization value is audited by three network firms. So like that, there is a title is there. You can watch that for your understanding. What exactly the issue, you can understand there. Fine. So now this is going to be affected. Don't worry, until November 2025 also this will not apply. Getting it? If that issue, one student messaged already, not this time, last time, 800 new standard released. When it was released, is February or March month before May exam. Sir, is this applicable to me? You study. For you alone, it is applicable, is it? For others, it will not apply. For you, it will be applicable. Common sense. 6 months before. Yes or no? Exam before, any 6 months before, exam before 6 months, preceding 6 months, any issues or notifications comes, it will not apply. Moreover, if at all they apply also, they will give you through supplementary material, right? If they did not cover in supplementary material, what does it mean? It is not applicable, right? Even though this fellow will have a doubt. Fine. Are you clear? Now, when the principal auditor has to base his opinion on financial information of the entity based upon reports of other auditor, principal auditor shall clearly state the division of responsibility for financial information of the entity by indicating how much components, how many components, what is their share. You should indicate that in other matter paragraph clearly. Are you getting it? Now you see, the most crux part in the standard is definitions and acceptance. KPMG was levied penalty because they violated this requirement. Can you accept as a principal auditor for a company if they call and ask you? You can accept only if you check the following elements. How much materiality of the portion that you are auditing? Being a principal, you must have authority over major material portion of the financials. Suppose one of the entities is there, in that case, major 80% of the business is happening through one subsidiary company. That company you are not auditing. You are auditing a normal holding company, which is just a holding company. Getting it? It does not have any business. Now saying subsidiary company is audited by other auditor, how come I am responsible and you gave negligently the report? You are getting the point. Predominant portion is audited by other auditor. When predominant portion is audited by other auditor, then why did you accept principal audit position of this company? This is the clause on which NFRA levied penalty. Getting it? So what is the materiality of the portion of financials that you are auditing? Principal auditor's knowledge regarding components. You must have knowledge of business that is happening in components. How much knowledge you have? Risk of MMS. Performance of procedures that are given under SCA, this standard. Whatever procedures that are given in the standard, how far you can execute those procedures? If you think in all the cases, yes, then only accept principal auditor position. What do you mean by principal auditor position? The moment I am accepting as an auditor of a company which is required to prepare consolidated financials, then the standard is applicable. The standard is applicable in two cases. When you are doing audit of consolidated financials, which includes standalone financials audited by other auditors. When you are doing audit of the standalone financials, which includes branch financial statements, which is audited by other auditors. In these two circumstances, this standard will be applicable. That's why you see, who is an other auditor? Other auditor means an auditor other than principal, who with responsibility for reporting financial information of a component. They are only responsible for financial information of the component, which is included in Financial information audited by principal auditor. Who is principal? He is an auditor for the entity. Principal auditor is an auditor for the entity, where that information includes information audited by one or more component auditors. Component, why they use the word component? Why they did not use the word branch? See, for consolidated financials, standalone financials of subsidiaries are component. For standalone financials, branch financial information is a component, correct? So component means what? Component means it's a division or branch. This is from standalone financial statements point of view. Component means subsidiary, joint venture, or another entity. This is from consolidated financials point of view. Component is a division or branch from standalone point of view. Subsidiary, joint venture from consolidation point of view, whose information is included in financial information, which is audited by principal auditor. If you are accepting as a principal auditor, you should decide first, do you have that eligibility criteria to accept? You will have eligibility criteria only after you evaluate these elements, correct? Once you satisfy all this, you are normally entitled to rely upon the work of other auditor. You need not doubt, because other auditor is also a chartered accountant with a COP. You need not doubt, correct? Now, once you accept as a principal auditor, once you become a principal auditor, there are some responsibilities for you. What responsibilities? At the planning stage itself, tell the other auditor how his work is going to be used by you. Make sufficient arrangements, special considerations. Tell other auditors what are the special areas they need to focus on. In the KPMG issue recently, which has happened, principal auditors argued, KPMG argued, whatever standard requirement is that I followed. The NFRA said, you followed everything except this. Because the partner did not study this question, important question is not there. Getting it? Principal auditor's procedure, he did not study, he did not verify. First of all, you are unfit to accept a principal auditor of a holding company, where there are entire businesses carried through subsidiaries, for which auditors are separate auditors. Suppose you are only auditor for subsidiaries, you are only auditor for holding, happy, do it. Predominant business is done in subsidiaries, and that you are not auditing, and you are saying that they did audit, how am I responsible? But you are giving the report on the group. As a group auditor, you have responsibility for intergroup component transactions, everything. You need to verify. And again, he says, working papers, I don't have access. Working papers are property of the auditor as per SQC. They are not giving me. ISA 600 says you have to take. Are you getting it? So now SA 600 is being aligned with ISA. I am not going deep into it. I'm only giving you a brief idea of what happened in Cafe Coffee Day case. Are you clear? Close to 3,000 crore fraud, I think it is. 3,000 crore worth of fraud. Diversion of funds. Fine, it's okay. I'll connect it at another place. Now, at the planning stage itself, principal auditor should tell other auditor what reporting requirements apply. Because other auditors may not aware of CARO applicability, other auditors may not aware of IFC reporting applicability, they are not aware of it. So as a principal auditor, I should know what are reporting requirements applicable for the company, so that the branch auditors also follow the reporting requirements, correct? Then, what else principal auditor can do? He might discuss with other auditor what procedures to be applied, and I can ask him a review. I can review a written summary of what all he did. And I may visit the other auditor also. The standard gave me a right. Nature, timing. Now tell me how far I interact with him, how far I discuss with him. These are all dependent upon the circumstances and knowledge of competence of the other auditor. So what is the knowledge I have about other auditor's competence? Depending upon that, should I discuss with him how many times I should discuss, should I visit or not? All this will be discussed. Principal auditor's procedures. Principal auditor should at the planning stage tell the other auditor how his work is going to be used, tell him what are the special areas to be focused on, tell him what are the reporting requirements, discuss with him, visit the other auditor, whether how much extent, what kind of way you do this, to what extent you do this, how many times you do this, depends upon principal auditor's knowledge of the circumstance, knowledge and competence of the auditors. Simple. Next, now tell me, there must be a proper coordination, right? In order to execute principal audit procedure, there must be proper coordination. What is coordination? The other auditor, knowing the context in which his work is used by principal auditor. Other auditor should understand how his work is going to be used by principal auditor. Accordingly, he should bring to the principal auditor's attention any matters that are relevant at consolidation level. Other auditors are also liable to bring to the principal auditor's attention at consolidation level, and they need to follow timetable for audit. Yes or no? Because if principal auditor has to give audit report on time, other auditors have to complete the audit report much before the principal auditor, and he should ensure that compliance with relevant statutory requirements. Similarly, principal auditor also has a responsibility to coordinate with other auditor. If I came to know some suspicious transactions, if I think they may also be there in the branches, I should tell branch auditors, I should tell subsidiary company auditors, nothing but component auditors. Principal auditor should bring to the attention of component auditor any matters that are relevant at component level. I should also tell him. So we must work like a husband and wife. Next, when considered necessary, principal auditor may also send other auditor a detailed questionnaire. And asking him to give, and the other auditor should reply to principal auditor on the questionnaire he is asking. You're getting it? All these elements NFRA verified in KPMG. Next, suppose if at all there are key findings in other auditors, suppose significant findings were there in other auditors, what principal auditor has to do in this case? Remember, this entire standard is drafted from the point of view of principal auditor. So if at all discuss with the management of the component, discuss with the other auditor, do supplementary test if you require. If you require, do supplementary test. Document how many components were audited by other auditor, what is the significance of those other auditors components to the financials, how much percentage of turnover, how much percentage of expenditure, how much percentage of assets, how much percentage of liabilities were audited by other auditors. Significance, that's called significance. Names of the other auditor, what decisions you have reached. Principal auditor should AC poiducha? Is it there? And I'm getting tired. The principal auditor should also document procedures performed and conclusions reached. Suppose, sir, other auditor, they gave modified opinions, sir. What principal auditor shall do in the overall audit report? If at all that branch is immaterial, if at all that component is immaterial to the overall financial statements, even though the component auditor gave adverse opinion, that component is an immaterial component. No business happened in that. I will ignore that. Suppose other auditor gave adverse opinion, other auditor report, component audit report. Should a principal auditor also give adverse report? No. See what is its materiality to overall consolidated financials, overall standalone financials, how far that information is material. If it is material but not pervasive, he will give qualified opinion. If it is material and pervasive, principal auditor also will give adverse opinion. Suppose if I am unable to use the reports of other auditors, management is not letting me to use the reports of other auditors, qualified opinion or disclaimer of opinion. That's it. Over. SA 600 is over. Clear? All of you. Then let's look at 299. Let's look at 299. Joint audit of financial statements. 299, the standard heading is what? Joint audit of financial statements. Joint audit of financials. Very simple. Joint audit refers to appointment of one or more than one auditor. Appointment of two or more than two auditors. Getting it? Two auditors means what? Two different sole proprietary firms or two different partnership firms or a combination of sole proprietor and partnership firm. If you are appointing two or more than two auditors for the same entity, for the same financial year, for the same scope of work, we call them as what? Joint audit. Generally, when joint auditors are appointed, why joint auditors are appointed? To enhance the quality of audit, to reduce the burden on the auditor. That is the main reason why joint auditors are appointed. For banking companies, joint audit is compulsory as per RBI directives. Now, the responsibility of the joint auditor. How the responsibility of joint auditor? They have a divisible responsibility. They have an independent separate responsibility. When the work is divided, based on assets or liabilities, income and expenditure, geographical areas, identified units, period. They will ask you, write about responsibilities of joint auditor. They'll give a case study. They'll give you below, in the light of the above case scenario, describe what are the responsibilities of joint auditor and comment in the given case how the responsibility will be shifted by them. Getting it? But there are some cases where joint auditors will have a combined responsibility. When the combined responsibility will be there, when the work is not divided. or when the decision is taken by all the joint auditors, or matters brought to the notice by all the joint auditors. Matter brought to notice by which date? Before audit report date, correct? If at all any matter is brought to the notice of other auditors after the audit report date, the joint auditor who failed to report this, that fellow is responsible to give an answer on that. Or for verifying disclosure requirements in financials, can notes to accounts, no, 100 pages is there. Joint auditor one, you see 5 pages, you see 5 pages, you see 5 pages, you see 5 pages. Can I divide the work like this? No. For presentation and disclosure requirement, whether financials are prepared as per applicable framework, for that all the joint auditors will have a combined responsibility for ensuring that audit report complies with the relevant statute, to ensure that audit report issued is as per the statute, as per the reporting standards, ensuring that audit report follows the audit report given is as per the format applicable. So for that also all joint auditors are responsible. In this, one important point is there, coordination among joint auditors. One point, coordination among joint auditors. Joint auditors shall coordinate with each other. In sense, if joint auditor during the course of his work, tell me, can a joint auditor rely upon the other joint auditor's work? Suppose other joint auditor came and said, sir, purchases, liabilities, everything is true and fair, I saw. You can trust him. You need not verify his workings. He is also a CA like you. So you both, he said everything is true and fair. In your areas, you felt everything is true and fair. Both of you together will give opinion. Sir, what if tomorrow it is wrong? That's why all of us are signing the audit report. That's why we are documenting the developed audit plan. The work allocation between joint auditors shall be documented. Why you are documenting work allocation? Tomorrow if some issue comes, who did that work? Accordingly, that fellow is only responsible to answer. Correct? So a joint auditor is entitled to rely upon the work performed by other joint auditors. At the same time, if a joint auditor identifies any scenario that affect other joint auditors' work, immediately he should bring it to the notice of other joint auditor on or before the date of audit report. That is called coordination among joint auditor. That point is missing. Coordination among joint auditor point is missing. Please make a note of it. Coordination among joint auditor. Further, in this standard, there is an objective. What is the objective of joint auditor? That we have given in question bank. At very few standards, not even few, 1 or 2 standards only, 1 or 2 elements we directly discussed in question bank rather than discussing it here. That's it. One standard is joint audit. That's it. Rest all other standards, 100% content given in the IC book is kept here. Clear? Next. Now, audit reporting. How joint auditor should report? Generally, all the joint auditor will arrive common conclusion and give a common opinion through a single audit report. However, a joint auditor is not bound by majority. A joint auditor is not bound by, actually here you remove not. No joint auditor is bound by majority. Getting it? If at all there is a difference between joint auditor, the joint auditor who is disagreeing should give a separate audit report. In such a case, each joint audit report should contain reference to another joint audit report in the other matter paragraph. Why such a reference should be there? Multiple reports are there. Now shareholders will follow which report? They will read both the reports. In both the reports, opinion, basis for opinion, they will read. Whoever basis for opinion is convincing to them, they follow their report. Simple. That is their choice. You need not worry. Clear? Now, what are the special considerations? Many times this was asked from the joint audit. If at all the exam question is coming, that either comes on special consideration, that either comes from responsibilities or from coordination. From these 3 areas only, generally you will get questions. Special consideration. What joint auditors? All the joint auditors should establish jointly the strategy and develop a joint audit strategy. And they should develop joint audit plan. When they're developing plan, they should identify division of areas and common areas. They should identify reporting objectives. They should communicate significant factors. They should consider results of preliminary engagement activities. These are the same points that are there in audit strategy chapter for you. What are the points to be considered before forming an overall audit strategy? Consider the result of preliminary engagement objectives, considering the reporting objectives. Remember, this is reporting objective, not reporting requirement. Reporting objectives means communication objectives, nothing but what? Reporting objectives means communication related responsibilities. Okay, and communicate significant factors identified with each joint auditor. So each joint auditor should communicate with each other significant findings that is affecting the other joint auditor, and the joint auditor should develop a joint audit plan that contains separate areas, combined areas. So all the areas should be covered in the joint audit plan. They may ask you only a 3 marks question on this. Joint auditor shall discuss and develop a joint audit plan. What are the points to be considered while developing a joint audit plan? And remember, all the joint auditor shall do risk of material misstatement. Risk assessment must be performed by all the joint auditor, and they should document all the procedures performed. All the joint auditors should document whatever procedures performed, whatever evidence gathered for individual areas, combined areas. If it is combined area, all of them has to document. The soft copy, all of them has to maintain. Hard copy maybe multiple, how many ever joint auditors were, that many copies will be taken. Getting it? Work allocation should be documented. They should obtain common engagement letter. They should obtain. Actually, they say obtain. It's not obtain, we should give. Engagement letter is something the auditor will give to the company, and they should obtain common representation letter, MRL, from the management. Common representation letter they will get. Under 580, we will discuss what is a representation letter, all that. Clear? Joint audit is over. Other matter paragraph is over. Clear? Now, look at other matter paragraph. I'll just conclude it. So, when to issue other matter paragraph? If in auditor's judgment, the matter is relevant for understanding of audit, auditor responsibility, audit report. You can use other matter paragraph if it is not prohibited by law, or if the matter is determined as a key audit matter. If it is not determined as a key audit matter, use it. If it is a key audit matter, discuss it key audit matter directly. Manner of presentation. You should present other matter paragraph in the audit report as a separate section. Under separate section, you present. Correct? Like for example, I'll show you this State Bank of India audit report directly. Yes. This is the State Bank of India auditors report. You see other matter paragraph. We did not audit the financial information of so and so. They mentioned, right? Now, actually, in other matter paragraph itself, they should also talk about who audited branches, all that. But State Bank of India, on the face of the opinion, below the opinion section itself, they are taking the advantage of the standard and giving here, instead of giving somewhere in the other matter paragraph, which is last. They are giving in the first itself. What are they saying here? The branches audited by us and those branches audited by others were selected by bank so and so. These unaudited branches are so and so. Just a minute. I think in consolidated financial statements related audit report, it was there. Yeah, here it is there. Other matter paragraph. We did not audit the financials of 6,000 branches whose total assets are 23 lakh crore, whose total revenue is 1.7 lakh crore. This and all is included in the balance sheet P&L. This much assets and already. Extra assets we audited. This much asset, this much revenue we didn't audit. Who audited? The financials of these branches were audited by branch auditors, whose reports have been furnished to us, and our opinion as it relates to these amounts is purely based on branch auditors. Our opinion is not modified in respect of the above matter. By the I'm not objecting. I'm just telling you these are the branches audited by other auditors. What do you mean by 6,000 branches? You will not understand the impact. No. So I'm telling you total assets how much belong to 6,000 branches. Total revenue belongs to 6,000 branches. How much? This is audited by other auditors, and our opinion on total financials is based upon these reports. Clear? That's it. So with this 600 is over, 299 over, 700 over, 705, 706. 5 standards are over. Clear? Next. You're able to connect, all of you. Next. So next we will discuss material uncertainty related to going concern. What is it? Material uncertainty related to going concern. So other matter paragraph is also over. Other matter paragraph is also over. Now we are going to discuss material uncertainty related to going concern. You all can take a notes along with this. Along with me, you can take a note of this if you want to. Check whether preliminary assessment of going concern is performed by management. In going concern, you should check first whether preliminary assessment is performed by management. If the answer is no, why they didn't perform? If at all they are not at all performing, we will give a modified opinion. We will give which opinion? Modified opinion. If at all management is not doing preliminary assessment. Yes, they performed. Check whether events and conditions are identified. If the answer is no, no events or conditions identified, auditor just have to verify preliminary assessment and express unmodified opinion. It's right away, no problem. Auditor will assume that going concern is appropriate. Verify the preliminary assessment related workings and going concern is appropriate. Auditor will think that going concern is appropriate. Don't worry, first I'm drawing the diagram, then I'll explain you. Getting it? Then suppose no events and conditions are identified, some symptoms are identified that may cast a significant doubt on the entity's ability to continue as a going concern. If events or conditions are identified, if so, auditor has to do further audit procedure. Auditor has to do further audit procedure. Why are you doing further audit procedure? To determine whether there is a material uncertainty. To determine whether there is a material uncertainty. Suppose if there is no material uncertainty, even some symptoms were there. Sometimes company there may be a loss possible. There is a possibility of loss sometimes. For some years loss will be there. Loss in P&L account, negative cash flow. These are an indicators, right? Financial indicator for going concern, right? Yes or no? So financial indicators will be there sometimes. But that doesn't mean company will stop. So parts and parcel of the business. Losses something. So events or condition identified. But no doubt about the future. No material uncertainty. When there is no material uncertainty, auditor has to check whether applicable financial reporting framework require disclosure of those events or conditions. Check out whether the company disclosed or not. Check out. Reporting requirement is there in the framework to disclose these events and conditions. Company disclosed it. Unqualified opinion. Correct? With respect to going concern. Suppose no events and conditions are there, but uncertainty, going concern all not affected. But financial reporting framework says company has to disclose the events, but company did not disclose. What we will give? Since they did not disclose what is required in the framework, we give which opinion? Modified opinion. This point standard is silent. Or they just ask the auditor to check whether applicable financial reporting framework requires disclosure of the events or not. Check it out and see whether they disclosed or not. What if they did not disclose? Standard did not tell. We should understand. Clear? Suppose if material uncertainty is there, investigate the other evidences. You investigate whether this uncertainty can be resolved or not. Suppose not just uncertainty, company completely about to, company management decided they can't resolve. The company management decided they can't resolve the situation at all. No prospects at all. Company cannot recover from this uncertainty. For sure they will fail within next 12 months. That is what the evidence indicated me. No, already negative cash flows. Employee strikes are going on. Company operations are halted. Everything is stopped. Literally business is not happening. Going concern assumption is completely inappropriate. But still financials are showing going concern is appropriate. Which means a disclosure related to fundamental to the users is misstated. It's a pervasive. Which opinion auditor has to give? Right away auditor has to give what? Suppose going concern is inappropriate. After material uncertainty evaluation, you decided you decided going concern is inappropriate, and financial statements are not disclosing this. The financial statements are not disclosing it. What auditor shall do? Straight away adverse opinion. In basis for adverse opinion, give the reasons. Suppose going concern is inappropriate. Company also agreed, acknowledged, and they prepared financial statements on that basis. Financial statements they prepared on liquidation basis. Financial statements are prepared on liquidation, and in the financial statements they clearly highlighted that we are no more going concern, but since the timeline for reporting comes, we are preparing the financial statements, but company is not able to revive the operations. The liquidation process, all that will start very soon. Right now this is the status of the company. They honestly disclosed that inappropriateness related information in the notes to accounts. Then auditor will give which opinion? Honestly they disclosed everything. Unqualified opinion. plus notes to accounts talk about this entire situation company is facing, right? Highlight that in emphasis of matter paragraph. This is what asked in recent May 2024 exam, question number 1B. Are you clear? This is not there anywhere except in the pronouncement. This is not there anywhere except in the pronouncement, but I tell this point generally in class. This is what asked in May exam. Many students wrote material uncertainty related to going concern answer. That's wrong. That when it will come, I'll show you now. Understood? Clear? Right now what I am discussing, going concern is inappropriate. Getting it? And the company disclosed financial statements are adequately disclosing entire the situation clearly. They prepared on liquidation basis. They presented clearly what is the basis of accounting. Everything they honestly presented. The auditor shall give unqualified opinion, and in emphasis of matter paragraph, auditor shall highlight what is the basis of accounting for preparing these financials, because the financials are prepared not as per GAAP. They are prepared as per some liquidation basis, because going concern assumption is missing. Clear? Suppose no, material uncertainty is there. Some symptoms are there. Uncertainty is there. When I did further audit procedure, company is giving me all the future plans. The company is explaining me all the future plans. Superb, the plans and all are superb completely. Material uncertainty is there. You know, where company is proving me, sir, don't worry, sir, right now it is appropriate. I know we are having losses. I know we are paying lately to the creditors, all that. But we are honoring, sir. Within the timelines, we are honoring. We are borrowing loans, sir. We are raising extra funds, sir. Forget about it. We are having accumulated loss, sir. All that forget. Are we functioning properly or not? Yes, you are functioning properly. And these are our future plan of actions to revive this situation. So company showed future plans, assumptions, everything they showed. I verified all these assumptions and all. I felt now in the next 12 months, company will not dissolve. But there is a uncertainty. We don't know what will happen in the next 12 months, but I cannot say that it is inappropriate, because right now company is functioning properly. Just that they're having accumulated losses so much, just that the net worth is negative, just that the working capital is negative, but still company is honoring plus or minus with some 10-20 days due date. They're honoring, but in the next 12 months, I don't know whether they will be the same situation or not. I don't know. Even on the date on which I'm giving audit report, still the company is honoring every payment. There is no strikes that and all going on. From balance sheet date, next 12 months, I don't know whether the same situation continues or not. Material going concern is fine right now, but material uncertainty exists. But material uncertainty exists. Here material uncertainty is what kind of uncertainty? 100% not uncertain. 100% not certain. Somewhere in the middle. So 50-50 chances. Company may revive itself, may not revive itself. Company is finding some private placement, equity, some private investor they're going. So they're going for private placement. If they get extra fund, they will revive the company. Otherwise, they may not revive. This situation, company, going concern is appropriate, but material uncertainty exists. Now what auditor shall do? The auditor shall do the following. The auditor shall do, if going concern is appropriate, but material uncertainty, I will simply ask the company, please disclose that entire situation in the financial statements. The company not disclosed. Company is not adequately disclosing material uncertainty related to going concern. They said going concern is appropriate, but this uncertainty is there, right? They are not disclosing in the financial statements. They are not disclosing in the financials. What auditor has to do? Qualified opinion or adverse opinion? In reasons, basis for qualified opinion, basis for adverse opinion. Correct? All of you. Generally, if the situation comes in reality, we directly give adverse opinion. If at all company going concern related disclosures are wrong, we straight away conclude it is pervasive. You can treat it as adverse opinion. Suppose company, they clearly mentioned. For example, you look at Air India. The Air India, the financial statements clearly mentioned. The financial statements clearly mentioned. The company has incurred a net loss of 7,000 crores in the current year. 70,000 crore accumulated losses is there, because of which complete net worth is eroded. In spite, which may cast a doubt on going concern, the management is of the opinion that going concern is appropriate in view of support from government of India. Though there are 70,000 crore negative, though the cash and bank balance are negative, working capital is negative, the company still feels going concern is fine. Why? Because government of India is supporting. So then why? What is your problem? How long government of India will support? That's the problem. When they will withdraw, we don't know, right? As long as it is supporting, you're fine. When they will withdraw, we don't know. This is the uncertainty with respect to Air India situation. And what the company has disclosed everything honestly in note number 53. Everything is highlighted in note number 53, this uncertain situation. Now, when everything is highlighted, what opinion auditor will give? Unqualified opinion. But why they give qualified opinion? Here the qualified opinion is given on some other issue, not related to going concern. With respect to going concern, here matter is not there. In basis for qualified opinion, going concern issue is not discussed, which means on going concern point, what opinion auditor gave? Unqualified opinion, correct? So auditor will give which opinion? Unqualified. But see, if at all this point is not explained by the auditor here, how do people know that there is some important issue? So what auditor can do in note number 53, he has to highlight, no, where he can highlight emphasis of matter para. But emphasis of matter paragraph is only normal para where it highlights important issues. But this is life and death issue of the company, like a continuity of the company. So highlight it with a separate name called material uncertainty related to going concern. Many students wrote this answer for the question which is asked there. May 24 attempt. You are getting the point? May 24 attempt, they asked this question. They asked this question, which is there in the pronouncement. But many students wrote this answer, which I am going to tell now. So, yes, if going concern is appropriate, material uncertainty is there, and yes, financial statements are adequately disclosing that. Then which opinion auditor will give? Unqualified opinion, and highlight that under not emphasis. Dedicated para they gave to highlight. Remember, material uncertainty related to going concern. This is a section in the audit report, right? This is also an emphasis, right? This is also an emphasis of paragraph kind only, because here also you're just highlighting, you're not talking anything. But here you're specifically talking about going concern. Draw your attention to so and so. You see, Air India, we draw attention to, so like having regard to so and so fact, and our opinion is not modified. Same EOMP requirement only. Our opinion is not modified. All these points, where it will be there? EOMP. Clear. That's it. 570 is over. This is what there in the entire 570. If you look at entire 570, the standard will have these components. So first of all, what is the significance of going concern, which is an accounting related content. Then they will talk about what preliminary assessment management has to perform. Management has to perform preliminary assessment. For example, what they need to perform? Actually, 570 is not there. 570 is not discussed in depth for you in CA final. It is there only in the CA intro. 570 discussion is there only in the CA intro. In CA final, only diagram is given. There is a chapter called completion and review. Inside that, there is only one diagram which is given, but questions will be asked very in depth. For that, you need to refer CA inter book going concern matter. CA inter going concern pages, 4 pages discussion. Going concern 4 or 5 pages is there. Discussion on going concern. Approx 5 pages is there. That much and all again not possible at final. Yes or no? So what I did is, I gave a mediocre content, like not giving that detail, at the same time not ignoring like institute. So I gave a medium content. So auditor has to check whether management has performed preliminary. Whose responsibility to assess about going concern? Management is responsible. They should do this preliminary assessment. First they do basic assessment, like they will look at nature and condition of the business. Are there any external events that are affecting business? Are there any operational forecast foreseeable future data is available that shows company going concern is affected? Are there any big events, transactions happened that affect going concern? So preliminary assessment they will do. If at all in all these cases the answer is no. No events and conditions are identified. No events and conditions are identified. Auditor also will verify these, whether management did this assessment. He just verify the workings, will directly proceed, give unqualified opinion with respect to going concern. Suppose if in the preliminary assessment management identified some symptoms, management identified some events or conditions. What do you mean by events or conditions? Events and conditions are broadly categorized into financial indicators, operating indicators, and other indicators. For example, like indicators are what? These are the events and conditions that cast a doubt on the going concern. They are only indicators. That doesn't mean going concern is for sure affected. If you find the indicator, you need to do further audit procedure. If you find this indicator, what further audit procedure you should do? You should do further audit procedure, like whether first of all company has a policy of going concern assessment. What is the management plans for future actions to deal with these events? Whether entity prepared a cash flow forecast. If so, what is the data they are using? Whether assumptions are reasonable or not? Whether any additional information is available to the auditor, because management did this assessment 4 months ago. Now as on audit report date, I should once again check. Remember, CARO clause number 19. Yes or no? Material uncertainty point only. On the date of audit report, do you still think whatever liabilities that were there on balance sheet date will company honor? Think about it on date of audit report. So on the date of audit report, do you find any additional information available related to going concern? Check out and get a written representation from management. Ask them to give a declaration that you are going to implement these plans. These plans will revive the company. Give me a declaration. Are you clear? Have you studied this? No? Fine. Suppose now when material uncertainty exists, what auditor has to check? Events or conditions are there, uncertainty is there. You just have to check whether financial statements are disclosing clearly that. Suppose no events or conditions there, but it does not result in uncertainty. That's just a normal loss. This year alone we got a loss, that too because of some extraordinary activity, some extraordinary item. In that case, see whether financial statements provide adequate disclosure as requirement of applicable framework. Same the diagram which I told. So no. Suppose if material uncertainty is there, material uncertainty is there, events or conditions identified that resulted into uncertainty, and that uncertainty is like highly uncertain in the sense you felt that going concern is inappropriate. You felt that going concern is inappropriate, but still company prepared using going concern basis. The auditor shall express adverse opinion. Suppose going concern is appropriate, but material uncertainty exists. Financials are not disclosing this. For example, auditor will give either qualified opinion or adverse and indicate the reasons in this. Suppose going concern is there, material uncertainty is there, Air India. Which auditor will give which opinion? Unqualified opinion, and draw attention to the readers to the specific note point with a heading called material uncertainty related to going concern. When this has to be done, if auditor concluded that financial statements adequately disclose material uncertainty that may cast a significant doubt on entity's ability to continue with going concern, and management should disclose clearly that entity cannot realize its assets and liabilities in ordinary course of business if at all going concern is missing. That fact also they must disclose clearly. If everything is disclosed clearly like this, then I will give unqualified opinion. Highlight that point in audit report. Under which section? Material uncertainty related to going concern. But the CA Institute book, CA Inter book, nowhere they spoke about going concern inappropriate. Company also prepared, you not using going concern, liquidation basis they prepared. What auditor has to do? Pronouncement only contains that discussion. Getting it? So what auditor has to do? Auditor will express unqualified opinion. Auditor shall draw attention to the basis of accounting followed for preparing financials without using going concern in a separate, in under emphasis of matter paragraph. Auditor has to draw attention to emphasis of matter paragraph. This is the question which exactly was asked in May 24, question number 1B, 4 marks question, 5 marks question. Clear? That's it. Going concern 570 is over. By the way, what are the indicators? Financial indicators. Net liability position, borrowings and all coming towards maturity, but I don't have money. Negative cash flows, adverse ratios, operating losses, dividends we discontinued just because we don't have cash. We are unable to pay creditors on due date. Cash, until now they used to give credit, now they are only giving on cash on delivery basis. Inability to launch a new product. These are all indicators of going concern. Financially we are unable to do. Sometimes there will be operating indicators, loss of key management, loss of major market, labor difficulties, highly successful competitor is emerged. In all these cases we have questions. Other indicators, non-compliance with norm, Paytm, which has not complied with KYC norms, Paytm Bank, RBI suspended their license in Jan or February month. Pending litigations, if at all successful against the company cannot discharge that liability. Environmental litigations and all will be there. If at all company failed in that litigation, they have to close the business. Changes in law that affect adversely the company business. Changes in law which is affecting adversely the company. Uninsured, underinsured catastrophe. Some catastrophe occurred, my machineries and all were destroyed, insurance is not sufficient. Then also going concern will affect. That's it. The standard is over. And by the way, you have to communicate. The auditor shall communicate. They may ask you this itself for 4 marks. They may ask you this itself for 4 marks. What are the communication requirement to those charged with governance in relation to SA 570? The auditor shall communicate whether events and conditions constitute material uncertainty, whether management use of going concern is appropriate or not. Auditor should verify and communicate to the management again. And adequacy of disclosures, implications for audit report. So before finalizing audit report, you first tell them, this is what I'm going to do because of so and so disclosure. You have to do all this. You didn't do that. That's why I'm going to do this. If at all management reply, no, don't do that. We will revise the financial statement disclosure so that it's true and fair. Then you will give which opinion? Unqualified opinion. Are you clear? That's it. 570 is over. Next. By the way, in this 570, they may ask you about preliminary assessment. They may ask you about preliminary assessment. You know, this itself can, sorry, this is when, you know, these are further audit procedure. When we will do this? When events and conditions are identified. Why we do this? To know is there a material uncertainty. To know whether there is a material uncertainty. You see the diagram? That's what I told. You see, so first auditor has to check whether management is doing a preliminary assessment. If yes, check whether events and conditions identified. If so, further audit procedure. If at all there is a material uncertainty, see is it inappropriate or still appropriate. No material uncertainty, check the requirements of the framework whether disclosures are made. Suppose material uncertainty not disclosed, adverse opinion. Sorry, going concern is inappropriate, not disclosed in financials, adverse. Disclosed in financials, unqualified, emphasis. Suppose going concern is appropriate. Going concern is appropriate, but material uncertainty exists. Whether the financial statements are disclosing it, yes, unqualified opinion, highlight it in the material uncertainty related to going concern. Suppose it is not adequately disclosed, give qualified opinion or adverse opinion and highlight the reason in the basis for adverse or qualified opinion. Clear? You're all. So that's about going concern. 570 is over. In the ICA book, the standard is not given. They only gave a brief or diagram. They just gave a diagram which is not complete. Clear? So 570 is over. Material uncertainty related to going concern. Now we need to discuss what? Key audit matter. So material uncertainty related to going concern is over. Now let's discuss what? Key audit matter. Okay, 2 minutes, I'll continue.